Hey everyone, welcome. I'm Gabrielle Raymond McGee, the Chief Operating Officer of the Tory Burch Foundation. Thanks for tuning in today. This webinar series, the whole focus is to offer you guidance and support as you navigate this COVID crisis as a business owner. And we know we cover a ton of information in our 1-hour sessions together. And I want to remind you to check out the Tory Burch Foundation YouTube channel. All of our webinars are on that channel, so feel free to rewatch. Or we also know we're all taking on new roles and are very busy. So if you miss a webinar, check out that channel. It's there to support you. Also, check out torybirchfoundation.org. I'm very excited. We continue to update new tools, new resources. Likely next week, we're rolling out a new e-commerce tool that's designed to supercharge your e-commerce business. So be on the lookout for that. I also want to thank everyone for your thoughtful and wonderful feedback. We design each session with you in mind. And today, based on your feedback, we're hosting our first Ask Me Anything. So everyone said, bring back Marilyn Landis and let's talk finance. So Marilyn, thanks for being here.
Absolutely. Looking forward to the questions.
Great. And for those that missed last week, a little bit more information about Marilyn. She is a financial expert. She's the CEO of Basic Business Concepts. And Basic Business Concepts, I love the concept of your business, which is you provide CFO level support at affordable prices for small businesses. And this is so critical, Marilyn, because the CFO is critical to businesses looking to survive this crisis, to thrive, and yet the price tag of a CFO is often cost prohibitive. So thank you for coming up with this brilliant solution, and thank you for being here today to answer all of the many questions we have around finance.
That's a tall order. I will do my best.
Great. And the way this will work is we received so many, again, really thoughtful, brilliant questions from our community, and we will hit on as many of those questions as possible. I will also manage the chat box, so don't be shy. The whole reason we're here is to answer your questions, so ask away, and we'll get to as many as possible. Let's kick things off, Marilyn. So many of our questions stem around PPP still. So PPP is a great program for many people. There's a ton of confusion around it. So let's start with the state of the union for PPP. It's changing hour by hour. I know we've had some great conversations around it. What do people need to know this hour for PPP?
Gabriel, you're absolutely right. The new guidance, or the new rules, they continue to come out daily. We're up to now, the newest rule is number 49. Some of those have 5 or 6 pages behind them, and that's on top of the 31 pages that came out originally and the 20 pages that came out in the middle. So it's been a constantly, I've heard this analogy used a couple times, it's like trying to fly an airplane while they're still building it. So that has caused obviously a lot of confusion in the marketplace. The most recent one, changes that have come out, I don't think you've missed a whole lot. The most recent ones have been around eligibility issues. For example, if you have gambling facility, how much your income can be gambling, faith-based, and other eligibility requirements is what most have been. The biggest one that was out there, and until this morning, was still undefined and was causing a lot of angst. And many of y'all who are on this call and many of your questions may revolve around this. And that is that question, are you really eligible for the payroll protection loan? And if you got the money, should you return it? I know I have been fielding a lot of questions, very concerned questions about this. And that rule centers around a couple of pieces that came out in April and May. One of them originally, and I'm reading directly from the reg, all right, certification on the borrower application that the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. All right, that was the first piece. And then when some very large companies like Ruth Chris and Shake Shack got loans, and there was an outcry about them getting it, then on May 3rd, there was a new piece added, again from the regulations, says certification in good faith taking into account their current business activity and their ability to access other sources of liquidity sufficient to support their ongoing operation. All right, so those two combined have caused a lot of discomfort.
Yeah.
Unfortunately, well-intended, very professional CPAs and attorneys have been advising their clients based on the fact that making a decision whether or not they should return that money, originally by May 7th, now May 14th. If they couldn't meet that requirement,
Tomorrow.
should they return it? Yes,
Yeah.
tomorrow, right? So obviously the angst level was getting pretty high. I've had clients send me opinions from their attorney where they paid for 3 or 4 pages of legal opinion. Now keep in mind, CPAs are trained on tax code, attorneys are trained on the law. The basis of the payroll protection is based on the SBA's 7A loan program. That's the basis of it. And there's a document called the Standard Operating Procedures, which is really like the Bible for lenders and around this. It dictates the mission of what SBA is all about. So in those regs I just read, to me, who's been an SBA lender for years, I hear the echo of the words that are used in the SOP. So I know where that would tie into the SOP's requirements and regulations. So as a result, a lot of misunderstanding over it. You add to that the intense political pressure that those who shouldn't get it need to return it. So a lot of companies have been very concerned. Also, we had notice within the past week, the Department of Justice was going to be doing investigations into fraud. And there was already a high profile case of a couple people they brought forward on that. So all of it was legitimate reason to be concerned. Finally this morning, all right, just came across my inbox this morning. And the notice now says there's a safe harbor for small business. This is just incredible. And that safe harbor says that if the loan is under $2 million, it will be deemed to.
Marilyn, we're getting a lot of feedback from you.
Okay.
I don't know if it's your microphone,
I know what the problem is.
Or your paper, but we want to hear every word you have to say here.
Okay, that's my problem with my paper. Got it. Okay. This is the newest regulation just out this morning. SBA, in consultation with Treasury, has determined that the following safe harbor will apply to SBA's review of paycheck protection loans as to this issue of eligibility. All right, as far as certification for need and certification for no other access to capital. Any borrower that, together with its affiliates, receives a payroll protection loan with an original principal amount of less than $2 million will be deemed to have made the required certification concerning the necessity of the loan request in good faith. So if your loan amount is under $2 million, or that loan amount combined with any affiliates, and there's a few quirky cases where affiliates could also get a loan. If it's under $2 million, you're deemed to have a safe harbor. All right, the assumption is, and if you read the rest of the regs, the assumption is that businesses applying for that amount probably don't have access to other means of capital. So everybody can just, all right.
We can all breathe, right?
That's right.
Because we've received many questions saying now that there's more confusion, but more rulings on the forgiveness of it, should they be returning? Because people certainly don't want to be in a place of fraud when that's not their intention. So this is really imperative news that came out today that everyone should be mindful of, which is as long as you are accessing and taking the PPP funds in good faith, you're covered, right? And
That's
there
right.
will be no fraud held against you in good faith.
For those 2 certifications.
Mm-hmm.
Obviously, if you certified to other things, the 2 guys they arrested in Rhode Island were trying to certify they owned restaurants that they didn't. All right. Fraud's still fraud.
Yeah.
So this does answer the one question. If you certified that you needed it, you certified you didn't have access to other capital, if your loan is under $2 million, you will be considered to have told the truth. They're not going to audit you for that. If your loan is over $2 million, and the guidelines go on to stress, if anyone on this webinar has got over $2 million, don't panic. Yes, it will be audited, and you simply will have to show that you needed it. It's not that you can't pass that test. Now, what we still don't have is the rules for forgiveness. So many people, that's the other piece. Maybe they did qualify, maybe they did need it, but they're worried they may not get the forgiveness piece, and it will become debt. And for many small businesses, that's a burden they may not be able to shoulder. So
How do you weigh
Unfortunately,
that factor, Marilyn? How do you weigh that risk?
first thing I recommend you do is look at what your business was like before. If it could not have absorbed the loan before, then there's no way you can assume you can absorb it now. So if it does turn into a loan, that's going to be a serious problem for you. If it would have been tight before, well, figure your business may not come roaring back, so it might be tight now. One of the things that there is a bill that's sitting right now with the House. They're trying to get it passed this week. It's got a lot of pieces that are not bipartisan, so it probably won't get passed across both the House and Senate, but it's a beginning point. And what they're trying to do is, the law gave up to 10 years to repay the loan, which would have solved the problem, Gabrielle, you just raised. I don't know if I could pay it back in 2. Give me 5, 6, or 10, maybe. A lot of things, in fact, the Office of the Attorney General, or the Investigator General, has challenged the SBA's rules don't comply with the law. That's not uncommon, that the law is passed and the rules depict something different. And the idea that they would only have 2 years when the law gave up to 10. So they're trying to codify that, trying to correct that with the new bill. So they're trying to make it easier, but it is a question. From the very beginning, I've said to people, don't rush and get it if it's going to be a loan and you can't afford to pay back the loan. You're no further ahead.
What other factors? We have some great questions. Noel here is asking, what other factors should you consider when deciding when to accept or even apply for PPP funds and when it's really not a fit for your business?
Right now, because the payroll protection requires at least 75% of the proceeds to be used for payroll, if you don't, and that's based on, the amount you're getting is based on 2.5 months of an average payroll, forgiveness is on 8. So the only way you can maximize the forgiveness on the payroll is if you really are going back to the payroll you had in 2019. So if you don't expect to do that, if your business model is changing, you're going to need less employees, then this may not be a good fit for you. We don't know on the forgiveness side yet if the money that doesn't get covered, and this is just the math of it, if you have to have a minimum of 75% for payroll, no more than 25% for those other very specific things, that's 100%. So if that's the requirement of the law, how would you have anything not forgiven? So that's the piece that's unsure about what in fact will roll over into a loan. So the business has to look at what it needs. If it needs payroll, absolutely, this is a great loan for it. If what it really needs is, it needs to pay for space, or it needs to pay for business product development, or it needs to pay for new software development, or other things, or inventory, this is not the loan for that.
So one point that we didn't just hit on is time, the time factor. So Christy here is asking, she's a store owner, she received PPP funding. However, her store is not open right now, and they're trying to save the money until they're open. But there's that 8-week window. Can you discuss the parameters around what we need to know about that 8-week window?
Unfortunately, again, when the law was passed, the intention was to provide funds to help businesses retain people on their payroll. When the regs were written, the determination and the regulation, there's a difference between law and regulation. Regulation can be changed by SBA and Treasury. A law has to be changed by Congress. So when the law was written, it said the money has to be disbursed, meaning it has to be in the bank account of the borrower 10 days after it's approved. So whether you're ready for it or not, there it is, it's in your checking account. From the day of disbursement, you have 8 weeks to show payroll that would be forgiven. So if you're holding it in your bank account waiting for your store to open, you've missed 1 or 2 precious weeks. So it's a question of, can you spend enough in the remaining time to meet the forgiveness rule? So that's the piece where many are asking Congress to step in and override the regulation and extend it. Because when it was originally envisioned, nobody thought we'd be out 8 weeks. The assumption was we'd be in lockdown a couple weeks, and then you'd come back and have 8 weeks to bring people back. Now, many places, even if they can bring employees back, they couldn't bring back a full complement of employees. So if you're sitting on the money, best thing I can suggest is if you can pivot. For example, I have a client that's had the opportunity to go into telemed, never been there before. So they're hiring people who know something about telemed. They're meeting all the goals of the law because they're expanding their payroll, actually. and they're going to be able to get forgiveness for that because it's all good payroll dollars. If you have things you can do, I have a friend who put his people to work even though they couldn't go on job sites, getting certified in a new line of construction that he thought would be more productive when we come out of this. So he put people to work productively, moving the company forward, even though they weren't on a job site traditionally putting the hours down for the work. So those are things that they should think if they've got the money. The other thing one of my clients has honestly said, I can't use it all under the terms of the forgiveness, and I'll repay what I don't get forgiven because I need the money to pivot my company in the right direction right now.
So be strategic. I know, Marilyn, we've had so many conversations about skate to where the puck is, not where you are. So business owners need to move, they need to be flexible and think through how can they really utilize their employees in whatever this new season will look like for their business, right?
Exactly. If you've got the money already in your bank account, don't sit on it because you're going to make it that much harder unless you plan to turn it into a loan. Talk to all the people in your framework of reference that'll help you think creatively, strategically. And then as you pivot, make sure that that business you're going to pivot into is going to be profitable. That isn't always true. Your worst nightmare would be getting approved. Everybody on your team agrees with you that you're going to make that right-hand turn and everybody loves it. And you get there and it can't make enough money to pay everybody's payroll and salary. So be careful, but you need to have these crunch times right now and don't just sit on the money or you're not going to get it forgiven and you'll have to just pay it back anyway.
Yeah, and just going back to even the step one of PPP, and if you missed, I think it was our second webinar, we really took you from point A to point D step by step for PPP. So make sure you check out that webinar. But Gail here is asking, if you applied for the first round, you haven't even received a response, should you apply again? And I know we've had great discussion through the foundation on CDFIs, women business centers, credit unions, fintech companies like the Squares, the Cabbages of the world. So can you walk us through what people need to know about the ecosystem and this current second wave of PPP that we're sitting in anticipating a third round to come?
Well, two things. One, the sad reality is small business owners have been told over and over and over again to the point where they can repeat the mantra from memory. Form a relationship with your bank, form a relationship with your bank. As a result, many of them have been loyal to a fault with their banks. The large banks we now know prioritize based on the size of the loan and their customers that they felt they wanted to get it. As a result, clients who had 20 years relationship with their bank missed out on the first round, even though they applied 3 hours after it opened, and were well into the second round and still didn't have a notice. And it had nothing to do with the business. One of my clients, I advised that they pull that application from the large bank and place it with a small one. They were approved within 8 hours and had the money in the bank 2 days later. So for many small businesses, many businesses, big and large, this has been a real wake-up call to just how important their business and small business is to the bank they're banking with. The other thing has changed. Traditionally, you were told you want to go with a bank where they can serve all your needs and you can have your deposit account there. So the comment I get from my clients, I don't want to go to another bank. I don't want to move my checking account. You don't have to. And many of these alternative lenders, the ones you were talking about, don't require a deposit account. That's not a requirement. They don't have a geographic footprint. They don't have a branch you can go into. It's a different type of banking. If you haven't dealt with that before, the advantage to it is you're going into these places and they are interested in, many of them have their niche. They like they like retail, or like B2B, or they like B2C, or they're really comfortable with software. Well, that's great, because if you fit within what they like, they'll be able to grow with you when you go from here. Their programs, their ability to tolerate risk will match what you want to do, and they'll be a great resource.
Great, Marilyn. And we have a number of questions about the loan forgiveness for PPP and how best to track so that you receive ideally 100% loan forgiveness. What do people need to be recording and being a good steward with this PPP?
First thing they need to do is take responsibility for it themselves. I have had several of my clients send me Excel spreadsheets that their CPAs or attorneys have given them and said, if you fill this out, you will get forgiveness. I don't know how they know that. The rules haven't been written yet. Okay? So the best advice I can give is take responsibility yourself. Whatever's easiest for you to track where you spent the money. For those people who have QuickBooks, they can open a class. And they simply call that, they code everything that they do, they pay out under the payroll protection to that class. At the end of the year, it's like having a P&L. Here's the money that came in, and here's all the things I spent against it. Clean, simple. If they can't do that, they should open their own Excel spreadsheet. Be sure they track everything. Old school had a paper file they put the papers into. Have a file on your desktop that you put all your electronic stuff in, and document. When you got the loan, you had a reason you felt you needed it. Take a minute now and write that down. Put that away in a good place if you're ever asked. When you applied, you based it on what you thought was your payroll at the time. Write that down. So when you come back to forgiveness, you can compare what you put in your application originally and your thoughts were then with where you are. And that'll get harder if that 8-week for forgiveness becomes 24 weeks, which is what's being proposed in the House right now. You might not remember. So the best thing you can do is keep track of everything, document everything, and if in doubt, document it. Then when the final application, and we're promised it's going to be out this week, let's hope, then you can compare your record against the application for forgiveness. And I've heard people say, well, the banks are going to decide forgiveness. No, SBA will. The banks will have to follow the SBA's rule. So don't let anyone tell you right now they can guarantee your forgiveness. They can't. They can't. That's
really helpful, Marilyn. There's so much confusion around how to track. You've mentioned lawyers, CPAs. Can you talk to us a little bit more about who can be a true navigator for our community in figuring out? I mean, it sounds like we all need to be futurist in anticipating what the SBA, what rules they will have around forgiveness. So who else can we all go to help navigate and make sure that we're following the rules and mitigating risk where possible?
Well, if the current place where you have your loan, if they were an SBA lender in the past, they're a great person once they get a chance to catch their breath, and that's starting to happen, to bounce some ideas off of them. You know, just to make sure that you understand what you got yourself into with this, because they would know that SOP I'm talking about, standard operating procedure. If you have some very specific questions that seem to fall in a gray area, don't hesitate to call the Small Business Development Centers, the SBDCs. Many of their volunteer counselors are working very hard to stay up to speed on what's going on, and they'll research questions for you. If you get caught in a trap, and I've fielded a number of these questions over the last few weeks, where they were told one thing by the bank, they've been seeing something else in the regulation, and they're caught in the middle. One, for example, was told he had to borrow by location. So he borrowed for the first location, went back for the second. They said, oh no, you only get one loan. Somebody else, the bank said, here's the amount you can get. Then somebody else calculated a different amount, and their note came for yet a different amount. All right, the ultimate place they can go if they're caught in the middle of a web of regulation is the Office of the National Ombudsman. And that's sba.gov/ombudsman, or they can get a hold of me. I have a federal appointment to the Ombudsman's board. There are 50 like me scattered across the country, so if they go on to sba.gov ombudsman, they can find the list of those of us who are federally appointed to serve on the Ombudsman's board, and we can walk them through. But that's the ultimate place you can go if you're getting conflicting information and you can't get an answer out of SBA, because SBA can only tell you what the reg says. That's all they can tell you. They can't adjudicate in those gray areas yet. So if you're caught in one of those, and I've directed 2 or 3 people over the last few weeks to the Ombudsman's office for assistance. There's no cost for that. You're a taxpayer. It's free. And they will escalate to the highest levels in whether it's Treasury or SBA and get an answer. Don't always win, but they have jurisdiction to get an answer.
Marilyn, I feel like that's a new resource that we're discussing. So we'll make sure to include a link to that office in our next email for this community. And just as a reminder to everyone, the financial first responders that we've gone into great detail on are CDFIs. We had Lisa Mensa, the CEO of OFN.
Great
CDFIs
resource.
can certainly be a great resource for you, as can women business centers. But what we keep hearing is email, don't call, since everyone's so overwhelmed. So I know we have.
And before we go on, Gabriel, 2 seconds on the Ombudsman's office. For everyone here, hang on to that email for the Ombudsman, that link when you get it. Because as you run into obstacles, the Ombudsman's office isn't just for SBA, it's every federal agency. So you run into issues with Department of Labor over the no coronavirus, family leave, you run into issues, doesn't matter what it is, OSHA, anytime a small business has a regulation that's overreaching, unfair, or being administered unfairly, they have resource of the Ombudsman. So they want to hang on to that link beyond just SBA.
Great, Marilyn. And I know we have a lot to get to as far as what reopening can look like and strategy and some other huge topics. Before we move on, one of our community members is asking about EIDL. I know we haven't really discussed EIDL in a big way. Right. What's the high-level summary that everyone needs to know for EIDL?
Those who had applied for an EIDL loan and got a notification are beginning to receive their advances. The advances were originally supposed to be $10,000. They were cut back to $1,000 per employee. So that part is happening. People are beginning to get, some people are getting follow-up calls for the actual loan piece of EIDL, which is a loan. And that's when there's a back and forth with somebody at SBA, just how much they need for that economic recovery. As far as new EIDL loans at the moment, those are restricted. The only people that can apply are farms and agribusinesses. There is money that's supposed to be in this fourth tranche of money that would reopen the EIDL program. It may be too little, too late, I don't know. But at this point in time, if you've already applied, eventually they'll get around to you. If you have not, the portal is closed to you unless you're a farmer or in an agribusiness.
Great. And one final question for PPP. We keep getting a number of questions about what it means as a sole proprietor. Someone here wrote, I've been told I don't qualify for PPP because I did not have a payroll program, but was paying myself instead. How do I truly check if I'm qualified when there's so much contradicting information out there?
Yeah, if you're one of these people that has to see it for yourself, go to Treasury FAQ. And I think it's reg somewhere around the 30s somewhere. It came out on April 26th, around that time frame, on how you can apply as a sole proprietor. Great. Now, if you look at the Schedule C that you filed for 18 or 19, and the bottom line on that is actually line 31, if that's less than 0, you are ineligible. So if you have maximized expenses to reduce taxable income, you will not qualify. If you do have a number there, divide it by 12, multiply it by 2.5, that's the maximum loan, but don't take the maximum loan because you only get forgiven for 8 weeks. So you're better to take 8 50-seconds, of which you're eligible for, and then that's deemed to be paid to you. So you get the check and you pay yourself out of the company, write yourself a check out of the company, and that profit is deemed to be your income. The banks were not prepared for this. They started accepting applications 3 or 4 days before the app was written, before the rules were written. So they didn't know, and there's a lot of misinformation. A lot of people were rejected. Plus, many self-employed have several different Schedule Cs in their tax return. And one of my clients applied for 2 of them, and they said, no, you have to pick just one. Well, one made money, one didn't, so we picked one that made money.
Very helpful, Marilyn. And I know we are still receiving a number of questions about sole proprietorship. So definitely check out Marilyn's presentation with us last week. It's on YouTube. And I remember you really go into detail on that as well as our webinar before. But moving on to strategy, because I know we're all expected to be futurist in this crisis. And I was actually in a meeting yesterday where someone said something so brilliant, which is in March, we woke up, it wasn't March 2020, it was March 2030, right? Yeah. So we're a decade ahead and just anticipating new rules from the government, how to keep employees, how to keep our business afloat. So we received so many brilliant questions about strategy from our community here. The first one is, how do you know what to spend your money on and prioritize what's best for your business in this crisis?
Everybody should be asking that question. Absolutely, everybody should be asking that question. And you can't answer it until you've done the really hard work of going back and redoing your business plan. You have to look at, who are my customers now? And some of it's guesswork. I'm working with one client, we call it, we jump off here to the right and see if this looks good. No, I don't like that view. Jump over here. No, I don't like that view. Jump over here. No, over here. Ah, this looks good. I think everybody likes this. Now let's go back and build the bridge to get there. When you figure out who your customers are going to be, what they're going to look like, how they're going to buy, how you're going to deliver your product, how you're going to manufacture it, produce it, acquire it. Your supply chains may have broken down. Once you have all that figured out, then you know how you want to spend your money. What are the resources you have now that you can apply to that? Can some people learn new traits? Can you pivot one source for another, give you more other added resources? That's what you need to spend on. You know, I'm a firm, there's something called non-operating assets. Let me give you an example. If you have a very fancy office with cherry furniture, but no customer ever comes in your office, that cherry furniture is a non-operating asset. All right. So you look at what you have. Do you still need it? And if you don't need it, where can you sell it or get money from it? And don't spend money now. Coming out of the recessions is critical. Two things. One, don't spend money unless it will move the company forward. Critical. Anything that's filling the hole or backfilling on things from before, do what you can to put those off until you've moved the company forward first. Second, have a very strict plan, because as soon as you start to recover, everybody will notice their chair is broken. Can't I have a new chair? I'm seeing business pick up. Why can't you spend money? Because we have this plan. You will, when companies grow, we specialize in rapid growth companies, and when you're growing, you're always ahead, your expenses are always ahead of your revenue. So you have to have the discipline to know what to spend it on. So before you, what do you know? You have to figure it out. You have to figure out where you're going, who you're going, what you're doing it with. Then you can set a discipline and then stick to it. Get your whole management team, whether that's you, yourself, and I, or whether it's a person across the table from you, but get everybody on board with that. And you're going to get stray guidance from other professionals around you, your banker, your attorney, your CPA, your best friend. And it's easy to get distracted unless you know what your plan is.
So that's a great segue. Someone asked, what are your best tips for choosing the right accountant at this time, whether it be an advisor, tax specialist, bookkeeper? What should we all look out for?
Well, the biggest thing you want out of your accountant for most small businesses is that they become your tax accountant. The rules for tax are so complicated. And you think we've seen a lot of change with payroll protection, try tax code. So you want to have, and you're going to have to file taxes, that's just a fact of life. So you want an accounting firm who understands the tax rules, can explain them to you, and help you make good decisions. If you have an internal bookkeeping system, don't pay an accountant to do that for you. Their fees are 3 times what they would need to be. If you like your accountant and they offer a bookkeeping service and you don't have it and want to use it, great. But you don't necessarily need to do that. Do you want them to consult you? Think about that. As I've successfully dragged 2 accountants to the dark side to become CFOs. It's a different world because we do deal in consulting. Many of the CPAs are bright, brilliant people, but they've never run a business. They've never taken an entrepreneurial risk. So you're asking them to consult you on things that they aren't familiar with, and they tend not to be risk takers. So, but you absolutely need to have them for, and if you have to have audited statements, you get to that point, you have to have them for that too.
Great, Marilyn, really helpful. As far as a good financial plan to sustain your business, I know you went into some detail and would love to hear more from you about profit and what you need to be looking at from a margin perspective right now. Can you share a bit more about that?
Sure. Absolutely. You know, there are 3 very specific, 3 things: profit, working capital, and cash flow. They are not the same thing. They all involve cash. And when you're growing your business or regrowing, think of it as you're trying to jump the high hurdle from a dead stop. So you're trying to get yourself back up again. What you have to look at is, are you going to be able to be profitable? Think about the small restaurant who's now at 50% capacity. They're going to struggle to be profitable. And as I said in our seminar last week, cash follows profits eventually. The inverse is also true. So if you're going to have losses, you're not going to have cash from profit. So you have to take a hard look. Second, are those profits going to be sufficient to cover your overhead? Maybe you have to give up some office space because you don't really need it. You don't need the prestige of it right now. Or maybe that relative who was convenient to pay but wasn't really producing, maybe it's time to have a heart-to-heart with them. So you have to take a look at, is there enough profit to sustain the business? If not, when will it come? In some cases, it might come with if you can buy in greater volume, then you get a cheaper price for your product, so you can turn it around faster at a higher margin? Where will you hit that point at which is profitable? So that's the first step. When will my profits sustain me? Until they do, should I borrow? Well, remember, if you borrow, you have to repay it. So that's a little chunk that has to come out of that little bit of profit. So it'll take a little longer. You have to figure that out to get there. And then the biggest piece that gets missed is working capital. And if you are a retail store where you put the item on the counter and they hand you a $5 bill, not a problem. The inventory is a different problem, but getting paid. But in most cases, even if you take credit cards, you've got to wait 3 to 7 days, depending on your credit card processor, before that cash is in the bank. If you're a service, you're probably invoicing your client and waiting 30 days or 45 or 60 days to get paid. Think of that as a pipe. All right, the length of time it takes for you to get paid, maybe you get a little help from your creditors, but if you've got inventory, that's cash sitting on the shelf. So that's the size of the pipe. And the more business you pick up again, the longer the pipe will get. Fill that with water. Pipe gets bigger, it gets longer, it takes more water. So many companies, when they're growing, get discouraged because they've got a profit, and yet the cash isn't showing up in their bank account. It's because it's getting sucked into this trading cycle. So you have to know what your model is, and you have to predict the cash for it.
Well, so Antonella is asking a question right on this topic. So how much is a good yearly profit for a company to last into the future? Are there certain targets or benchmarks that people should be focused on when thinking through their profit and their margins and so on?
Well, the best thing I can recommend, and you used to be able to go to the library to get this book. I'm sure it's available online. I pay a service to get it. But there's something called the Rma Industry Averages. And you can look under your NAICS code, NAICS code, and you can go in and see what the average profit is for your industry. That's a good benchmark. For example, there's no right or wrong. A grocery store works off of less than a 4% margin. They have to do a high volume to cover their overhead with that. You might have another company that's working on a bottom line 28% margin. All right, there's a difference in the way their businesses are structured. So don't judge yourself by a business that isn't within your reach. The other thing that's interesting, whenever I bring up the Rma averages, I always do that for a client when I first look at them. And I often will point out to them, I say, look, if we go across by size, where's the sweet spot where that industry is making the most money? And sometimes it might be under $1 million. And once it gets up over 3 million, it makes less profit. Obviously, it's got more overhead. It's got more components, more supervisors, more managers that it has to put in place. So there's no simple, what's really the sustainable rule is, here's my profit. How much of that one model I used before, increased working capital, how much of it do I need to grow? And if I can't generate enough profit to grow my business model, what can I do to change my business model? Improve the collection of my receivables, shorten the term of my inventory, reduce my overhead. If you can't do any of those, then you're going to have to borrow. Well, if you borrow, that further reduces it. So the biggest thing to look at is my profit. Will that support my growth, my sustainable growth? If yes, great. How do I maintain the profit? If no, what can I tweak in my model so I can get within that sustainable range?
Great segue, Marilyn, because we have so many questions about capital, credit, and debt.
Sure.
Specifically, let's start with loans. So what are some tips when applying for a business loan? How much should you be requesting? How do you figure that out? Do you shoot for a percentage of debt ratio? Walk us through what to know when applying for a loan and what people need to know.
30 years as a commercial lender, let me tell you what you never want to say. I'll take as much as you'll give me. Wrong, all right? You've just told the lender that you have no idea how to run your business. But the other piece to keep in mind is today, most small businesses are not talking to a credit expert. They're talking to somebody in a branch. So that person probably can't answer your questions. So you're going to have to do some of the homework yourself. The other thing to keep in mind is how much you should borrow is what you can afford to pay back. That's a critical component of that, what you can afford to pay back. And the other piece is, what do you really need and how long do you need it for? I always say project out what you think you're going to do in revenue. And if you're going to invest in regrowing, convert that to cash. And how deep does that hole get? That's how much I need to borrow. How long do I need it for? And when am I going to be able to pay it back? Those are key things. If you realize you're going to have a loss or a hole for a couple of months, you're going to invest in some things that are going to take some money, but by month 5, 6, or 7, you can pay it back. It's a line of credit. If you're in there and it's going to take a year or two, that's a term loan. If you're looking at 3 or 4 years before it's really going to be satisfied, that's equity. So there's no magic number. Now, the reason debt to income is, or debt ratio is important. That's a shorthand, but think of it this way. You have your balance sheet is made up of 2 components. You've got assets, which are things you own, and liabilities, which are what you owe. It's called a balance sheet for a reason. Assets have to equal liabilities plus owner's equity. What's owner's equity? That's cash from prior periods. All right. So if you think of it this way, if you're lucky, you just landed a big $100,000 contract. Great. You bill them $100,000 in assets. It has to balance. Where else has it got to come from? Debt or equity? It's either cash you've accumulated from prior periods supports that period while you're waiting to get paid back, or you have to have more debt. So why do bankers look at that debt ratio? The more dependent you are on debt, the more you use debt, the more dependent you are on income from future periods. The more you use your own equity, the more reliant you are on income from prior periods. So if you get that leverage too high, you're too dependent on future income that might be very uncertain in these times. So you don't want that so high that everything's betting on the future, which may or may not happen the way you think it will.
Got it, Marilyn. Very helpful. We know that this is a dire time, and we've had a number of questions regarding bankruptcy.
Mm-hmm.
And can you explain at what point should someone consider bankruptcy? Walk us through the difference between personal bankruptcy versus bankruptcy on your business, and what someone should know when they're exploring that option. Obviously, it's a last resort option, but we have received many questions about this.
And obviously, the first thing, I'm not an attorney, and important to keep in mind, the bankruptcy laws, even though it's federal bankruptcy law, there are variances from state to state. I'm not an attorney, can't tell you exactly what they are or why they are, but I know there are differences. So just because you had a friend or colleague who did something in another state doesn't mean it'll work in your state. But basically, if you personally have an issue and you file bankruptcy, that's a way to have, you're simply saying, I have more debt than I can possibly meet anytime now or in the near future. And you're asking the court to either relieve you of paying all that debt or having people settle. Business-wise is when you've got 2 choices in the business bankruptcy. One says, I'm done. There's just no way. There's no way it's coming back. I'm done. And I'm simply going to say to the court, I can't make these payments. And what they do is they say to the creditors, you're out of luck. If you had a lien on their building, you can take the building. Liquidate things and you're done. Some things can be protected, and that's a piece to talk to your state's attorney, or attorney from your specific state about. However, there's something called Chapter 11, and I think many businesses may at this point see that as a benefit. What Chapter 11 does is the owner is saying, I don't see a way out of this. I think there's one. I really think there's one. And if I could just get everybody to stop hollering at me, give me a time, I could come up with a plan, and we could get out of this. What Chapter 11 does is puts everybody on notice that you're going through a reorganization. Now, all the creditors have to stop. Now, what the business owner has to realize is that plan won't come from the business owner. The court will appoint a trustee. And if you have a good trustee, they may come up with a great plan, and everybody gets satisfied. They get maybe a little bit of what you owe them, but you preserve, the company reorganizes and moves forward. If you don't have a good trustee, or you have one that doesn't understand your business, it can have a bad outcome. So it's not your call anymore once you turn it over to the court. But companies big and small successfully go through an 11, gives them a chance to get ready to back off, reorganize, think. And I think you will see a lot of that coming out of this, because so much hit businesses so fast, and that there's so many variables. They just want to say, stop screaming at me, let me figure it out, and I'm going to let the court be the buffer, and we'll sort through this. They'll have a plan, they'll decide who gets paid what, and then we'll come out.
Yeah, well, it sounds like there are different transitions and different opportunities for everyone to review and figure out what's best for them. We have so many questions about reopening, given that reopening is such a messy topic right now. It's state by state. It's difficult to understand. So let's start. What can people be doing now to best prepare them to reopen successfully?
Really good question, because the ones that are hitting the headlines right now are the ones that are more tangible: the restaurant, the bar, the store, the retail store. And for those folks, their big challenge is going to be the occupancy limits that are being placed. And many of them are pivoting the way they deliver products to their customers. Well, if that works for you to do that, but will you have less sales because you don't have the impulse buy? While the person's there, they got something else. So you'll have to adjust to that. The harder ones are going to be companies who depend on other small businesses to be their logistic arm or provide other services to them, or the people they buy their product from. You know, I'm in Pennsylvania. We're in what's called the yellow right now, which is limited open. Ohio's going to be fully open next week. I have clients in both states. I'm threatening to move to Ohio if Pennsylvania doesn't open up sooner. But for everybody, it's a different call. Some businesses lost certainty, they lost footing, but they didn't really lose their customers during this phase. So for them, it's just a matter of how can I deliver the product or service in a way that's meaningful to my customer. And some of that means more of the kind of thing we're doing now, more Zoom. Some of it means doing a different type of product they can deliver. This reopening gradually is really taking the burden on small business, because the assumption used to be the small business was small, local, and simple. No longer true. The folks on this call know that they touch multiple states, if not multiple countries. So as a result, they've got to figure out what's going on everywhere and to try to figure out what they can do. It's going to take a lot. Being nimble. You're going to have to be nimble, quick, to survive this, because it's going to change hour to hour. Wisconsin just put great pressure on the governor, and he's starting to back off the hard lockdown in Wisconsin. So things change again their day to day. Small business, we have the advantage of, think of a big company who has to have a plan they're going to roll out across 50 states. And once they get it rolled out, everything changes. We can change on it. We're a bicycle. We can stop on a dime. We're not a train that's going to take miles to come to a stop.
Yeah,
So,
I think that's a great point, Marilyn. I know there are so many decisions that small business owners now have to take into account, right? We received a number of questions about PPE and how do you access that for your employees or your customer. And I think one of the key takeaways that I know you and I have is it's really important to think through all of the different scenarios and ways that you could pivot for your business right now, and really ask the questions like, are you providing safety for your employees or customers? And what resources are in your local community and how can you access them?
Or is it necessary? You know, you may have a business that doesn't have to have customer contact physically. They're not, you know, like I'm scattered across multiple states, 7 or 8 cities. So most of our clients don't walk into our office. So what I'm now rolling out as we're opening different places, I'm reaching out to them saying, where are you comfortable meeting? All right, that burden doesn't fall to me to have a safe place for them. I'm asking them, depending on their state and cities even, some cities are defying the state regulations. So reach out to your customers. You know,
reach out to your customers and be creative. I'm continuously amazed by the creativity. One of our Tory Burch fellows, she has a business called Own Your Wonder, where her whole business model is to have beauty experts come to people's homes and do beauty tutorials. Well, now with the safety, that obviously is a challenge that she can't surpass. But she became so creative in now having Zoom beauty tutorials. So I feel like the creativity is really inspiring to me.
Well, this is where small business, and the other thing too, that the small business members here, whose clients are big companies, this is important for them to think about. They need you now more than ever. A friend of mine has written a book about why the bigs need the smalls. All right, and her comment is, on a Sunday night when something goes wrong, whoever's running the division of wherever in that big company is going to call the small business and know they're going to get the business owner, even on Sunday night. And you're going to find a solution and you're going to fix it. Now more so than ever. So even your big clients will lean on you harder. And that's a really competitive advantage for us that many of our middle-sized competitors won't have. Oh, I don't know, I got to check with the boss. Well, you're the boss. And on the fly, you can make the decision, you can change it, and it may lead to a whole new avenue for you for opportunity that you want to explore. So your point, be creative, be nimble, but then stop a second, pull out a napkin, and figure out if it's cost effective to do that more than once. If it is, go for it. Make it a whole new way of business. If it's not, you did it once, you're not going to do that again.
Well, I'm very hopeful with how many questions we received from budding entrepreneurs. So many people in this community are looking to start a business right now, which I think is really something beautiful and shows how resilient we are as individuals and a larger community. So what advice do you have for new emerging businesses at this time? What should people really focus on from a financial perspective?
First of all, I don't know if anyone here remembers the recession we had right after 9/11. That's when I started my business. I read some statistics on some of the greatest businesses came out of one depression or the other where they got started. And there's a couple of advantages those of you that are listening here are thinking about with this. One, you're not dragging a legacy behind you. You don't have to explain what you used to do. You're not bringing all that with you. You're free to start fresh and do something new. Many of your competitors are still trying to pick themselves up and figure out where they are. You're already figuring out where you're going to be because you've done that business plan and you know what you need to think. And I've also seen some things coming out of SBA. I was on a conference call with SBA this week where they're actually looking at how they can tailor their 7A program, not the Paycheck Protection, their regular loan program, to help entrepreneurs get started, which will mean more reliance on projection loans, which banks have not done for decades. So this is a great time because people are actually looking at the importance of that ecosystem. We need the entrepreneurs starting new businesses to fill in the gaps right now.
We really do. I get such hope from all these questions about launching and growing right now. Someone's asking if they should start their business with a bank or a credit union when creating a business account. What tips do you have on that?
Well, it depends on what you need. It truly does. If you're starting your business with a loan, then you would look at who you have your loan from and if they have deposits and if that makes sense. Apart from that, you may not even need to have a business account with a bank or a credit union. There's lots of other options these days. You simply have to have a good place where you can track your records and that you can trust. That's the biggest thing. And most of it's flexible. Mobile banking, access web, online. That outdistances the old thing of I've got to have a good relationship with a banker. That's out the window. And I was a banker for 30 years, and even 20 years ago when I was doing that, we never got to stay in one branch long enough to form relationships. And now with the way banks are shifting and changing, that's kind of going away. So if a bank is convenient and you like their banking services, if you're opening a checking account, go there. If you want to talk to them about a loan, then make sure they can do the kind of lending you want. Some of the community banks will only do real estate. Others will do unsecured personal loans. Do a little homework. Talk to people. Find out who's going to do the kind of lending you need. It may not be a traditional financial institution at all. It might be somebody better.
Great. We're getting short on time, but we still have so many questions to hit on. So Carolina recently opened a retail business 6 months ago. Her brick and mortar store did not have the foot traffic she anticipated. She's thinking of taking on this lease for 2 more years. She would love your advice on should she just focus on her business online or continue with brick and mortar despite it not delivering even before this crisis?
Well, the first question I have is if it didn't have foot traffic before, why not? And is that going to change? Some of my retail clients are concerned that the businesses that were around them that drove the foot traffic to their stores may not come back after this crisis, that they won't have the foot traffic that they had before. So if you didn't have, now, if you were the first one in a complex and the foot traffic was going to build as that complex build out, you want to have some hard questions with your landlord about, is that going to happen? Are people canceling their leases? Who's coming in? What out do you have? So it's why the foot traffic. The other thing is many businesses are succeeding with online sales web, but it's like having 50 restaurants on the same corner. Eventually there's too many. So I think in time, website won't be the solution for everybody. So you have to look at what's the best way to deliver your product. I heard a woman speak who came up with one of the first to come up with the in-home parties. She defied all the odds, but she knew her product, that's the only way it could sell. Nobody would walk into a store to buy it. Nobody would go online to buy it. And she's had great success with it, even though all of the naysayers said she wouldn't. We have to be creative right now, and the traditional wisdom should be challenged. Used to be location, 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 maybe not. Think about this. You ever go by a factory that's empty, and next to it sits the railroad line. Why was it put there? Because in those days, you only got your product with a rail. Today, it's the internet connectivity you have. The rural areas complain that they can't compete because they don't have the internet connectivity. What will be the deciding thing going forward for companies, and what will drive the business with a product you're good at selling? And that's where you want to be located. Question the traditional wisdom.
Love it, Marilyn. Before we close out, I keep seeing this question pop up. Want to make sure it gets answered. So just jumping back to PPP, as an independent contractor, how do you prove payroll for yourself? What's the quick answer there?
It's the same answer as for the Schedule C employee, which is what you are. You look at line 31 of your Schedule C, and that's the amount that you can divide by 12, multiply by 2.5, but you only get forgiven for 8 weeks of that. So 2.5 is 10 weeks, you get forgiven for 8. And that's the money you can take out of the company, theoretically. Now, for some people who are in a struggling phase, they get approved, let's say, for $23,000, and they take $23,000 out of the company, but the company couldn't afford them to take the $23,000 out, they're gonna have to loan it back. But they can do that if they have to. They can go through the exercise of getting the money, paying themselves, and then if they have to, they lend it. Entrepreneurs lend money back to their companies all the time.
Yeah, and a few people have asked this question. I know the answer. There's a 100K max, so make sure you don't go past that.
Correct. Correct.
So Marilyn, this has been so helpful. Thank you for hitting so many of our questions. Thought we could end with a great question from our community, which is, what are 3 quick of the most critical financial recommendations you have to help us small businesses weather the storm of COVID? What are the 3 most important things?
I'm afraid you're going to hit me with that. So I have 3 things ready. 1, put numbers down. What's your capacity going to be? Your limits? How many customers can you reach? What's your customer base? What are the percent who are still going to be able to pay your bill? You know, coming out of the recession, I had lots of customers, but they were unable to pay me, and I wasn't able to be a volunteer. So who are your customers? How much are they going to put some numbers down? You know, what are your competitors in your market? What are they doing? What do they look? They may be gone. I read some statistics how the survivors out of this will be more efficient and more profitable, because maybe their competitors will be gone. And then what will it cost you to deliver your product and service in the new world? Write the numbers down. Take it, even if you don't know how to analyze them, you can find people to help you with that, but get the numbers down. Take a stab at what that is. 2, are you going to have a positive gross profit, meaning my sales minus my cost to produce it? So here's what I'm selling for across the counter. Let's keep this easy. Here's the cost of the inventory and the cost of the clerk to be in the store. All right, is that going to be enough to cover your overhead? Where do I get to break even? Play with that. What's the break even for me? And lastly, project, 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 project. Put your genie hat on and get out your crystal ball and project where you think your sales will be, what you think your expenses are going to be, and keep in mind then when the cash will follow. Do you get paid immediately? Do you get paid in advance? Do you get paid in 30 days? And then think about how you're going to deploy that cash to be a better company. But you got to spend some time with the numbers, and there's people like me, there's other people who will sit down with you and help you analyze the numbers, but you got to get them down because you know your business better than anybody else. And don't let anyone else tell you they know more about it than you do. So throw the raw numbers out. We used to have foreign guests have trouble with English, and we used to say, just throw the words on the table and we'll pick them up and put them together and make a sentence out of it, all right? The same with the numbers. Get them out there and then talk with somebody who can help you put them together.
I love that, Marilyn. Thank you so much for your time, your expertise. This has been so informative. And thanks everyone for the questions, the feedback. We want to hear from you. So let us know what other topics you'd like us to hit on. Don't miss next week. We're going to do our second AMA with Ramon Ray. Ramon is a marketing genius, entrepreneur, communication specialist. So be sure to be with us next Wednesday. We'll be starting at 12 p.m. Eastern, which is an hour earlier than usual. So make sure you have us in your calendar. Also, a number of people were asking great questions about where to access a business plan builder if they're just starting their business. And there's one right on our website. So check that out. It's a really great tool. We'll also be releasing the e-commerce tool, how to strengthen your business in e-commerce, likely next week. So be sure to check out our site. And thanks everyone so much for being here. Be well. Don't do this alone. We're with you. And we'll look forward to seeing you next week. Thank you. Thanks, Marilyn.
Thanks for having me. Thank you.
Take care.